Health insurers are looking to consolidate. To put it mildly, everybody, it's a tangled web of potential deal activity. Have a look here. Anthem wants to buy Cigna. United Healthcare is looking to take over either Aetna or Cigna. And Cigna, Aetna, and Anthem all have expressed interest in Humana. Bloomberg's Ed Hammond is here to make sense of it all. Ed, I've never seen anything like this before. Have you?
Not at this kind of pace. It's just so rampant.
One here.
No,
and if you add it all up, I mean, we're talking about $300 billion of market cap between these companies.
Right, and in an industry that is like so structurally important to the country. I think what's fascinating here is we've gone from a situation where there was basically nothing going on in the health insurance sector. I think there's a great stat here, which is
to everything going on.
Right, so I think from the beginning of 2013 until about 3 weeks ago, there had been $1 billion worth of announced M&A in U.S. health insurers. So that's over that huge period. And now we have, in the space of just 3 weeks, we have everything apparently in play.
We were just trying to figure out during the commercial break who's likely to be, like, crowned, if you will, here. And it seems, on the basis of what the numbers show, that United Health, with a market cap of $113 billion and a PE multiple, a decent PE multiple, probably in the best position.
I mean, look, they're obviously the biggest. I think they have the strongest hand in a lot of ways, but they do have some limitations. I think they obviously can't acquire Humana because they would have too much overlap, too much exposure to, as it were, publicly funded health programs or health insurance programs. I think they would also suffer if they tried to buy Anthem. I think there would be too much antitrust there.
So they could buy a Cigna, for example?
They could definitely buy a Cigna, they could buy an Aetna, or they could buy one of the smaller guys. But I think here's what United seems to be doing. United seems to be playing the cards most slowly, waiting to see what everyone else is trying to do, and then maybe they make their move last.
Do the smaller guys need to get bought here?
I think it's a question of eat or be eaten for the smaller guys. So I think if you're the smaller guys and you're looking at what's going on around you, you're thinking, well, I'm either going to be an acquirer in this space or I'm going to be acquired. Humana, I think, is the only one they've kind of,
These are not small companies. Humana is a $31 billion company.
Very big company.
And Anthem are $40+ billion companies. Cigna's a $39 billion company. And they don't trade at massive sales multiples. They got huge revenue as well.
Huge revenue. I think the other thing is if you're Humana, you have this very predictable, very sort of long-term revenue play because you have huge exposure to Medicare and Medicaid, and as we know, both of those are growing. They're both growth areas. I think they're expected to grow dramatically over the next sort of 20 years.
To what degree is this whole situation explained by Obamacare?
It's a big part of it. Look, obviously Obamacare has made, particularly Humana and Anthem, which do have this big exposure to Medicare and Medicaid, it's made them much more attractive as targets. It's also sort of forced the other ones, so it's forced Aetna and it's forced Cigna to look at it and think, well, hold on, that's an area where we don't have exposure. We're much more exposed to private.
Not as much.
Very limited. So they're saying, well, look, our exposure is more to kind of private health insurers, so we want to now move across into this. How do we do that? We get busy and make an acquisition.
Is this going to play out for months?
I think it will definitely play out for months. I think the interesting thing is going to be someone at some point is going to agree to do a deal, and then I think two things happen. One, the regulators are going to look very carefully at it. If it looks like they're going to let that through, it's possible we see someone else try and attempt a deal or someone try and jump that deal. I think the other thing that's going to happen is whoever does agree to sell themselves is going to ask for the most enormous breakup fee, because by taking themselves out of the market and out of play, the risk of if this deal falls apart and when they come back into play, everything might have quieted down.
And who doesn't like a soft cushion of a massive breakup?
You know who is making out like a bandit here?
Go on.
Wall Street law firms.
Wall Street law firms.
Always, though.
When are they
always.
not?
No,
but
like with this
Win,
many
lose, or
players.
draw, lawyers
true.
always get paid.
That's true.
They won the financial crisis.
That is true. Whereas Wall Street M&A journalists are just being worked like dogs at the moment.
There you go. And Wall Street M&A bankers are working like animals, but they ain't getting paid.
Well, they want that. There's going to be a completion fee paid somewhere here.
Yes,
right?
Without a doubt.
All right.
You better hope you back the right horse for that one. Yeah.
Ed, thank you.
Thank you.
Good seeing you this morning. Ed Hammond, he covers M&A here at Bloomberg.